5 trading mistakes you must avoid in 2025. Are your trading strategies as sharp as you think? Or could you be silently bleeding profits due to common, avoidable mistakes? Even the most experienced traders can fall into subtle traps, especially in a fast-evolving market like 2025. That's why today we're diving into the 5 trading mistakes you must avoid in 2025. Whether you've been trading for years or recently leveled up your portfolio, this video will challenge your habits, refine your strategies, and help you stay ahead of the game. Let's make sure you're not just trading hard, but trading smart. Now, stick around until the end, because I'll also share a powerful mindset shift that might just take your trading strategy to the next level. Let's dive in. Mistake number 1, overtrading. Overtrading is one of the most common yet destructive mistakes even seasoned traders make. The rush of multiple trades might feel productive, but ultimately it eats into your profits and exposes you to unnecessary risk. Think of overtrading like driving your car at full throttle all the time. It burns fuel inefficiently and risks the engine breaking down. Similarly, jumping into too many trades often leads to emotional decisions instead of calculated ones. For example, chasing after every trending stock or overreacting to minor market swings might seem like you're being proactive, but in reality, it's often driven by overconfidence or impatience. Ask yourself, are all these trades necessary, or are you spreading yourself too thin? Set a daily or weekly trade limit to maintain discipline and focus only on high-quality opportunities. Create a strict trading checklist that your trades must meet before execution. Take regular breaks and review your trading journal to identify any overtrading tendencies. By concentrating on fewer, well-researched trades, you'll safeguard your capital and optimize your returns. In trading, less is often more. Mistake number 2, neglecting market trends. As an experienced trader, you're probably comfortable relying on technical analysis in your go-to stock screener. But let me ask, how often are you analyzing market-wide economic trends? Neglecting macroeconomic cues or sector-specific cycles is a mistake that can cost you dearly in 2025. For example, in a booming sector, like artificial intelligence innovations, you need to capture emerging leaders early. On the other hand, ignoring central bank policies, geopolitical tensions, or inflation trends can leave your portfolio vulnerable to blindside hits. The market is a living, breathing entity shaped by global and local events. If you're laser-focused on isolated stock analysis, you could miss the bigger picture. Stay updated on key macroeconomic indicators like GDP growth, inflation rates, and interest rate decisions. Follow emerging sector cycles. Tech trends in 2025, for instance, could again reshape the stock market landscape. Pair your technical analysis with periodic deep dives into fundamental analysis to better predict long-term movements. Remember, the best traders thrive not just in individual trades, but by rhythmically aligning their strategies with market cycles. Mistake number 3, poor risk management. Risk management isn't a beginner's subject, it's the foundation of longevity in trading. The ironic part? Many experienced traders slowly get complacent and begin skipping the very basics that got them through their earlier trading years. Imagine this. You're so confident in your strategy on a particular day that you don't set a stop loss on one trade. Then, as the trade turns south, you hesitate to close the position, thinking the price will recover. By the time you sell, you've incurred a 25% loss, when you could have capped it at 4%. These scenarios happen to even the best of us. Master traders understand that preserving capital is more important than pursuing big wins. Always use stop-loss orders to define your risk per trade. Limit exposure to individual trades. No trade should risk more than 1-2% of your portfolio. Diversify. You might have a strong conviction about 1 or 2 stocks, but never put all your eggs in one basket. Review past losses for patterns of weak risk management and refine your boundaries. The golden rule of trading? Live to trade another day. Protect your downside before chasing upside potential. Mistake number 4, emotional trading. Even for experienced traders, emotions can still rack up unintended costs. A winning streak can fuel overconfidence and lead to high-risk trades. On the flip side, A bad day or even a single poorly timed loss can trigger revenge trading, where you try to recover losses impulsively. Let's look at a scenario. Imagine you've faced 3 losing trades in a row. Instead of reassessing your strategy, you immediately jump into another trade hoping to win it all back. Odds are this emotional decision will spiral into another loss. Emotional trading isn't just an operational flaw, it also takes a psychological toll, making you second-guess future decisions and undermining your confidence. This leads to an unhealthy feedback loop. Approach trading like a business. Set clear boundaries for your risk and position sizes before the day begins. Develop a trading plan with predefined entry and exit tactics for all scenarios. Take breaks when losses trigger frustration. A temporary pause saves emotional capital, which is just as important as financial capital. Practice mindfulness techniques to reduce stress, such as deep breathing or short meditations. Trading isn't about chasing perfection. It's about being composed enough to stick with your plan, come what may. Mistake number 5, over-reliance on automation. 2025 is shaping up to be a year dominated by automation and algorithmic trading advancements. While automated trading systems offer speed and efficiency, overly relying on them can introduce unforeseen complications. Imagine using a pre-programmed algorithm to trade on a trending stock. However, during a critical market fluctuation, it fails to adapt to new variables the way a human trader would. By the time you intervene, the losses have mounted. Likewise, there's a risk in blindly trusting AI recommendations without cross-verifying fundamental details. Even the best algorithms require human oversight. Treat automation as a tool, not a replacement. Regularly review the performance metrics of your algorithms. Periodically test and adapt trading bots to reflect evolving market conditions. Diversify your trading approach. Blend systemic trades with manual analysis and discretion. Always have contingency measures in place for technical failures or sudden market shocks. Automation can be an incredible enhancer for your trades, but your understanding, expertise, and adaptability will always be your strongest tools. Before we move toward wrapping up, let me share a few rapid tips to secure your trading journey in 2025. Maintain a detailed trading journal to analyze what's working and what's not. Stay plugged into industry forums or trusted communities of like-minded traders for fresh insights. Allocate time for continued learning. Market conditions are dynamic, and so should be your knowledge base. Prioritize quality analysis over quantity. Don't get buried beneath data that doesn't aid decision-making. Learn to distinguish between short-term news noise versus trends with real staying power. Let's summarize the 5 mistakes. Overtrading. Streamline your focus for fewer, more intentional trades. Neglecting market trends. Trade in harmony with macroeconomic and sector cycles. Poor risk management. Safeguard your portfolio with stop losses and diversification. Emotional trading. Stay disciplined and trade based on strategy, not impulse. Over-reliance on automation. Use technology as an aid, but never replace your active oversight. Avoiding these mistakes isn't just about saving money. It's about evolving as a trader, adapting to the rapid changes this new landscape brings, and ensuring you remain resilient in the face of uncertainty. Now that we've covered these game-changing insights, it's time to reflect on your trading habits. Which of these mistakes hits closest to home? What steps will you take to refine your approach moving forward? Drop a comment below and let me know what resonated with you most. If you found this video valuable, don't forget to hit the like button. It helps us reach more traders like you. And if you're hungry for more advanced strategies to sharpen your edge in the market, subscribe to the channel and turn on notifications. Remember, sustained success in trading doesn't come from perfection. It comes from consistent growth. Thanks for watching, and I'll see you in the next one.